One of the most common questions that we get asked on this channel is, where is the smart money actually investing? In today's video, we'll take a look at the statistical relevance behind this zone and, of course, what hedge funds and institutions are doing right now. We'll also take a look at retail traders like you and I and figure out whether we're making the same mistakes we always do. As tweezers appear on the Magnificent Seven, Tesla rejects the lows, and so much more is going on. Could it be that it's come time to follow the flows more than just the negative news bias? Well, in today's video, we'll talk about stocks, commodities, and cryptos and break it all down for you together. This one's not to be missed, guys. We'll see you in a minute. Well, welcome back everybody to The Daily Show. My name is Tom, and in today's video, we have a lot to discuss. Smart money versus dumb money, of course, some statistics around key levels, and more importantly, some massive dark pool movements. Yes, it's a big session and of course a big week. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there's a lot to discuss. Smart money versus dumb money. What exactly are we doing right now that could be a big mistake? And of course, where are we in terms of critical levels? As always, I want to give you guys a big shout out, especially right now, for getting us to 200,000. And thank you so much for your kind comments over the last week, telling me about how many shows you've actually watched. Some of you literally tell me you've watched every single one ever. I'm telling you what, that is a huge amount of commitment. So thank you so much, guys, and subscribe if you haven't already done so. If you want to find out more about daily stock market, crypto market, and of course, commodities markets throughout 2025. We've got a lot to talk about this year. It's going to be absolutely wild. Now, let's get into it. Hedge fund managers, institutional clients, what are they doing? Well, as it's been pretty well documented, they've been kind of selling, and they've started to slow or taper their sells. And this is an important point, because what you might notice down here is private clients have been basically buying the dip, but that may have just changed. Let's have a look at the latest data here. And it is pretty wild when it comes to what has just happened. US equities saw retail outflows in the last 2 weeks. What could that tell us? Maybe it is maximum fear starting to approach. And while the others are tapering, being hedge funds and institutions, dark pool activity kind of showing that a little bit, and we'll talk about that later in today's video, we're basically at a point here where the last 2 weeks has made a huge switch, which we haven't seen in over 12 months. So why could this be? Well, one of the big things is fear. Of course, tariffs, the news, everything else. We often say if it's in the news, it's in the price. And we say if it's in the press, it's in the price, actually. But this is probably a case here for what is going to happen on April the 2nd. Now, why do we say that? Because that's, of course, when these tariffs are meant to be implemented and everyone is going ballistic about it. Well, as it turns out, corporate insiders may not be as worried as you may expect, as they've been purchasing this last week or week and a half. And that's usually a pretty good sign. The next 3 months after corporate insider velocity started to increase, we usually saw a bit of a bounce. Now, that's not to mark that it's absolutely the end of the sell or anything like that. We've talked plenty about the stats moving forward, but I think it's at least worthwhile paying attention to. And on top of all of this, of course, we need to be paying attention to how retail traders are actually feeling right now. The latest retail trader sentiment report kind of suggests they're not buying the dip, but they have been. But it suggests that also these institutions, or like people that are a little bit more sophisticated, are super bearish. 60% of people that respond to this are actually going with the bearish side over the next 6 months. And the highest bearish reading was on the 26th of February this year. That is like epic bearishness. That is the type of level that we've usually seen during a full-on financial crisis, or at least a 20% sell-off, not a 10% one like we are right now. Now, of course, this brings out a differing of opinions. Some people will be saying a recession is upon us, and obviously you guys know, if you've been watching the channel for a while, I have been way more negative this year than I usually am over the last 2 years. And the main reason is because it's a little bit more unclear exactly which path we're going on. We shared a stat only about 2 weeks ago when the market actually fell through the floor, showing you that this type of velocity to the downside can bring with it recessionary style markets. But for now, what do we see? Well, the CTAs are hugely oversold. And this brings in an interesting one because usually we see a certain thing happen in April, and that tends to bring positive tape. So basically, CTAs are going to be forced to buy $69.83 billion and only sell a little bit over the next month. Now, could that instigate a bottom in the markets? Well, of course, yes, it possibly could, and it's something we need to be paying attention to. I also see this argument coming up all the time, which is the one about mutual funds and ETF outflows and all of these types of things. But basically, the big deal here is that assets outside of markets are getting big, and of course, they are technically ready to be deployed. Now, you probably heard this number before, $10 trillion on the sidelines globally in terms of MMF assets, and of course, $8.4 trillion alone in the US. But this doesn't have to go into the market, although some of it may be deployed. Now, what are some other good signs for the markets right now? And there, of course, are some bad ones that we'll look at later on. But the big one here is, of course, the 50 weekly moving average. Now, it doesn't always hold the market. As you can see here, we got a small relief bounce back in 2022, where we actually were selling heavily into the beginnings of the Ukraine-Russia kind of conflict. And we can also see over here that in previous periods, it's been a pretty consistent resistance or support line. Now, the 50 weekly is well used by institutions out there, and you often see it appear in their reports. So they do pay attention to it. And one of the reasons why it could be paid attention to potentially right now is not only have we stopped at it, but we've seen wick purchasing just as you usually get a turning point in the March statistics. Yes, at the end of March into April, we usually see a turn. And you can see here from the Stock Traders Almanac that basically the March market performance over the recent 21 years from 2004 to 2024 versus 25 almost looks identical to what usually we would have happen. If you actually go all the way back to 1928, you'll notice that April pretty much turns the market. And again, that is a statistical historical fact. Now, does that mean it's going to happen again? No, but I do find the timing very interesting. April the 2nd is the line in the sand here for the tariffs. Now, if that doesn't happen, doesn't materialize, is turned off, whatever could happen at that particular event, then all of a sudden we could see a huge shift, of course, towards buying. And I do feel like the market right now, and it'd be interesting to see what you guys think, is starting to find what looks like or maybe a little bit of base thanks to the Magnificent Seven stocks. Speaking of the Magnificent Seven, let's have a look. Tesla down 50% from top to bottom, obviously recovered a little bit. But you'll notice it's not really just one stock, it's all of them, down like 20% pretty much across the board. Google in particular getting thrashed down into some pretty significant lows and actually looking interestingly, especially interesting on the charts if it does turn around. The great thing about this market is even if it bounces and you're not necessarily on the absolute bottom or anything like that, there are plenty of stocks that are going to be showing a lot of great structure should we be able to actually show the recovery signals. And of course, we'll be talking about those together here on the channel. Let's talk about best PE ratios. We've already brought this chart up, so we'll go through it quickly. Nvidia, obviously, where we've usually seen bounce buys happen. We've talked about it plenty of times. Rare oversold conditions on the Magnificent stocks. This is the FANG, but again, rate of change got down to levels that we've traditionally seen be with temporary bottoms or even potentially the bottom for these particular sell-offs. And as you can see here, the Fed put may have started to come into play last week with the end of QT being pretty much signaled. I mean, it is pretty clear that we've got the end of QT coming in just a few months. Now, on top of all of this, we saw wild breadth changes. Now, we talked about this, 2 crazy breadth days. One that was like 90%, one that was like 86% or something like that. And while the next 2 weeks could be absolutely wild, as we've seen only 25% of the time it's actually bullish, the next 1, 2, 3, 6, and even 12 months later are actually pretty good. Particularly, we want to look at that 2-month, 3-month stat. As you'll notice, it appears many, many times. These are, of course, the previous times we've seen that significant event occur, and we've just gone through the 5th largest correction in history, with, of course, a 3-month roll generally being quite bullish. So the stats are in the favor of the bulls right now. Where should you be going? Well, the US looks pretty okay. Obviously, we've been huge fans of getting in on the China stimmy over the last kind of 12 to 18 months. But that may have changed. It looks like China's kind of hit a temporary peak, and we'll go through that later on. And certainly take a look here at the DAX. Does that look good? Not really. I would say the DAX looks absolutely peaky. While everybody else is floating over to it, now it's probably time to go, well, is that so good on the charts anymore? Probably not. It's starting to show those signs of peaking out. Now, what about silver? Well, silver's come back to a bounce level. It's been behind gold, and it is technically entering some of its stronger periods of seasonality. Now, again, if you've been watching the channel, you'd know that I've been picking silver a little bit recently, especially into these new highs that we've been forming. And one of the reasons was I'm so strong on gold. As you guys know, $3,000, we achieved it. That was fantastic. But on top of this, silver does have some of the great things that could push it through this year. Of course, the big story so far this year has been flows outside of the US. Germany, China, European financials, gold, anything against the S&P has pretty much been doing pretty well. But that could also turn if we start to see activation of the magnificent stocks. And one of the reasons is actually I saw a recent survey that said that deglobalization is the least concerned thing from people out of the top 10 or something like that, which I found interesting because to me, it's definitely a longer term investment concern. I'd be interested to know what you guys think about in the comments down below. It could be a bit of a problem, I'd say, as everyone tries to retool. Let's have a look now at the dark pools. What's going on here? We've got massive amounts of clusters of trades that have happened on the S&P. We obviously saw some big SPY trades coming through also, which is interesting, near the lows of the Friday session. And we also saw it appearing here when it comes to the Qs. Some big ones, big trades, just heaps and heaps and heaps of trades coming in as the market sold off and it kind of recovered back up. Now, is this important? Well, yeah. I mean, it's always important to look at flows. And speaking of flows, we're also seeing positive actions over the last 7 days now for Bitcoin. That could the crypto market be turning as well. Again, these are just all a little bit better than we've been seeing over the last month and a half. What about the markets? Are they still defensive? Well, in terms of sectors, you can see here again the Friday session, while not super bullish or anything, did manage to find mostly the buys in the risk-on style assets. Home builders worryingly down again. And you can see here the last 5 days of rotation. Well, it's been up, down, and all around for things like semis and stuff. But I would say it's a smattering of defensive and non-defensive assets. So really the sectors aren't telling us too much about whether the market's fully bought this dip or not just yet. So let's talk about this 50-day or 50-week moving average. I always call it the day one, but it's the weekly. So if you go back through history, you may notice that often when we come back and we touch the weekly, the 50 weekly, for the first time, it can instigate a DCB. That is, basically they call it a dead cat bounce, but we'll just call it a bounce in markets. And realistically, it can be maybe even the low of markets. You can see here a lot of times over the last 20-ish years, we've seen it act as a good stability factor for at least a relief rally. If we do get a relief rally, where do we expect it to go though? Well, one of the things is the 200-day moving average, which is one of the more critical moving averages. And we talked about this recently, that we usually would expect the market to be able to bounce back up to this zone. Now, some of the positive actions here are these wicks. I mean, look at this thing. This thing went down. We saw those dark pools kind of come through and we bid back up. So it could be a bit of a positive sign coming into this week that the markets want to go touch that 200-day moving average. But the way that it reacts to this 200-day and the structure that we form here, remember, if we do this, that could be a recession coming in, then we need to be paying a lot of attention to it. So, of course, subscribe to the channel. We will do so. Options high and low levels for Monday, here they are. But as always, the options itself actually do matter. Where have we got the walls? 5,600, 5,650. These are now becoming more important levels as we go through the Monday session. And as we enter into the actual Tuesday session, you'll notice 5,700 suddenly comes up again, which is kind of where we expected the market to get itself to. So we ended up closing at 5,667, 5,700 plus would make a lot of sense if you start to go out and look at all net expiries. So yeah, a lot of action here, still a negative gamma, you can notice across the board. So that basically means we haven't entered into a squeeze, that is a short squeeze kind of zone just yet. That's absolutely going to be, wild. But at the same time, the overall puts, there are still way more puts being stacked. And as long as the market doesn't lose those positions, it usually won't create another cascade waterfall style event. So we just have to stay above 5,600. That's the key this week, so far anyway. Now let's go over to what's going on with pretty much Tesla. Negative. Everyone's negative on it. If it's in the press, it's in the price, as we often say. And don't get me wrong, there could be problems on the investment side. I absolutely believe that. But we have approached the $250 target again. So if you bought 220, congrats to you. You saw those puts. You had a little smiley face on. You bought it. You went, yeah, I don't really mind. I don't care. I'll trade within the range. And you get it back to 250. Now, is 250 a TP zone? Well, for some people, I would say it could be. It's going to be certainly a call wall and a positive gamma flip zone. So it's something that we need to be looking at. It's a 250. It is clearly around this level. This is the resistance in the options world. And if we get through, then 300 would be the next target. And I still think these $900 calls are a bit wild. But anyway, they are there. And someone is getting crazy on Tesla. Now, on top of all of this, you've got to pay attention more to the switch zone. So if 250 is broken, would I short off that area? I probably wouldn't, because we know that that enters into the positive gamma. What about for NVIDIA? Well, certain things have changed. 130 is now the most struck level over the next 2 weeks. And pretty much this week, it seems to be 123 to 125. I'd like a 125 plus to really show that the semis are playing catch up though, and things are starting to improve. Now let's have a look at the warning signs. Do we have warning signs? Well, the bonds obviously were freaking out, and you can see here the bonds were freaking out. Now they've come back down a little bit. That can signal temp bottoms in markets, so that's a good sign, of course, for the bulls. We reported on that a little while ago. And obviously, if we're looking at an investor perspective, I am not a fan of home builders. I think this is an issue, and of course, long term, we'll be watching at this very closely, along with some other key leads. And I'll be informing you guys on this, because as an investor, you've got to look at this and say, I don't care if the market's up, down, all around. If I'm seeing things starting to fail, then all of a sudden I've got to start questioning whether I should be holding my positions. And it's part of the reason why at the start of this year I said, no more leverage for me this year. Because I was seeing quite a lot of worrying signs, mostly in margin. Margin was the big problem. We talked about it in our private community. Links in the description down below if you're interested in that. Let's have a look at the US 2-year, up, down. Not really too much to go with here. Basically, it's a better signal that it's down a little bit lower for the markets, but we haven't taken out that all-important 3.8 on the 2-year, as the Federal Reserve basically said, don't worry about the inflation. We're now worried about recession fears, and they kind of said, well, we're getting rid of the QT to a degree. Pretty much getting rid of it. I'd say QE will be not just around the corner, frankly, when it comes to the Federal Reserve. Let's have a look here at the US dollar. The US dollar is bouncing off these lows. Again, a little bit of bullishness here, and it's probably deserved because it was so heavily oversold. So something like this is the way that we're currently thinking about it. A little bit of a bounce, and then probably a resumption of sell. Now, because the dollar has been strengthening, in gold hit over $3,000, it started to go sideways. Probably no surprise to any of you guys. I actually think it will stay sideways for a little bit. Ultimately, we're looking for 3,600, but you've got to be prepared. If you're a trader, it could be like in a tighter range for now. What about silver? Daily 20 was hit, a little bit of a bounce off this area. What about structure on the smaller time frames? Not enough to go off yet. May need a new higher high, 33.25. Could be an instigation for some day trade buyers. And US oil is holding. My goodness, look at this thing hold. That also could be a positive signal basically for markets as well. So if we get oil to hold around this level, that is not necessarily that bad. And you can see it's putting in a temporary base at this stage, really trying to pressure that 68.70 area, which was a tweezer rejection. Remember, we look, and we're going to talk about in a minute, Magnificent 7 has a tweezer on it to the upside. If you get follow through on that, it could be a really, really big deal. A follow through with a close. No follow through close, looks really bad. All of a sudden, the short on oil looks horrible, and the longs on oil look way, way better. Daily 20 coming under a lot of pressure. I don't know about you, but if I look at that chart, I'm not super bearish on it or anything. I'd be more neutral buy in this case, but there are better trades out there. Speaking of the tweezers, let's have a look here at Tesla. Double close, pretty much oversold completely. a lot of the time these can just whiplash back up regardless of fundamentals or anything else. You've just got to remember it's all about a flow perspective. Stealing money from both the bears and the bulls is the way the market kind of works. That's why it's smart money, dumb money. And at the moment, we close above 250. All of a sudden, we could instigate 300. Obviously, check out the smaller structure. We'll do that if we do get through 250. We'll be talking a little bit about this sub 300 zone, about 295, that kind of area. What about the mags? Let's have a look at the Magnificent 7 here for a second. We'll load that up. And you'll notice again, a structural base could be forming. And more importantly, the weekly also held a few important areas. It held that demand zone. It found a double wick. There's crazy big volumes. And of course, if we get through 48 plus, then all of a sudden we're putting in really good structure for what really needs to lead the indices out if it's going to, and that is the Magnificent 7. They're being clocked and sold off recently. But why? Well, that was overpriced, and they're probably still overpriced, frankly, on a longer term scale. But again, relief rallies to be expected, and generally, a lot of people at least target in 20-day or 20-week moving averages and day moving averages. So those two levels are worth paying attention to. Let's have a look here at NVIDIA. Again, structure improved last week, still holding around that zone. We'll keep watching it. And one of the stocks I thought I'd bring up here is PLTR. And the only reason is because obviously it's sold heavy. And it sold really heavy. We actually lost 39% on this stock in only a few days. But whenever something was so bullish, I don't usually see this be the end. Generally what happens is we'll do this, then it'll be like, oh, and then sometimes we'll make a new high, and then it'll go like that, or it'll drop just off this area. There's usually some form of relief. Again, markets like to make money both ways. What do you think about PLTR? Is it improving for you? Again, weekly, a lot of wicks off this structure. I don't hate it. I don't hate what I saw. Closed on its highs. HSI, yeah, it's probably done for now. Now, that doesn't mean a longer-term investor is sitting there going, oh, China's over. No, it's just hit that technical resistance of 25, which we suspected. Again, congrats if you took around that profit. Never take 25. Always take a little earlier. Yeah, 24.8, 24.9, any of those areas, that would have been just absolutely fine. You do not want to go for the rounds. Never go for the rounds. So I could see this basically chopping for a little while. Certainly worthwhile paying attention to and seeing whether we get a cheaper price in the future. And US 2K didn't really break any structure. Nothing changed too much here. It just got above this high, which is 2,080. And then we put the daily 20 moving average on, which is going to be an important level because to really break this is key in previous US 2000 rallies. You'll notice when you go back over and have a look at it, you need to break these ones. You break the 20, 20, sell, broke it. Good sign that at least we're getting some form of recovery. When you look at the NASDAQ, those little dark pools that were obviously down here, little bit of a buy, nice close near the high. Again, can't look at that and say, oh, it's terrible yet. I do still expect this is a possibility. That is that even if we hit that daily 200, etc., that we could still form a new low before going higher. But we have to be paying a lot of attention more to the structure of the next month. Because the next month, if it goes bad and markets do this, remember that structure signals significant recessionary fears from the market structure itself. That is the flows versus just the news. Don't worry about the news. We've got to look at those flows and we'll be like, whoa, what's going on here? Let's have a look now at Bitcoin. Bitcoin at 84,000, of course, key level for it to hold. I would say it's improved. It has not done enough to get, back swing traders or back to, where it was in terms of the hype train. And you can see that in the crypto markets across the board. Are they looking like they want a little bit of relief? Yes. Ethereum here getting back above 2,000 at the time of this recording. But realistically, still struggling, I would say, when it comes to overall structure creation. For the news ahead, what have we got? Well, it's really down to only a few things. I think it's PPI on the Monday. So we've got PMI, PMI here is what we're looking at. And then we've got a little bit of information coming out from a couple of other countries. And then final GDP, don't really worry about that. It's always calculated by algorithms before it comes out anyway. And then core PCE, which is the Fed's favorite little reading that they like to use. They call it the real numbers or whatever they say. So guys, this week is incredibly important because of course we're trying to create a structural bottom. We're going to see a lot of money flow into the April 2nd announcement. I think that's going to dominate the news this week. Of course, we'll talk about it more. And yeah, depending on how that decision's made, of course, it'll give a great excuse for significant flow movements. And that's always what's most important. So if you're interested in this type of stuff, remember to subscribe, smash that like button, hit the alerts, and thank you so much for getting us to 200,000 subs. I just absolutely cannot believe how wild that is when I first started this channel 5 years ago. Thank you so much, guys. Bye for now.